YouTube, it's Louis here. We're looking at Hbar today. Yesterday we were talking about how the dump initiated. We were talking about that daily candle close, which signaled, okay, we lost that low, we should continue lower. However, luckily enough for you guys, I'm not just doing the daily time frame analysis. So we're giving this a much closer in-depth look, and we're looking at both scenarios. So if support wasn't lost, we were preparing for a double bottom yesterday, and that was on the 15-minute time frame, and we got this crazy follow through. So I'm really happy that I was able to warn you guys of this yesterday. We actually drew out the demand zone. If you weren't watching yesterday's update, go ahead and check it out. I will link it actually right now over here somewhere, and probably in the top right corner. But we were saying, if you look at that wick right there, there was some sort of rejection. So from there to the bottom, I've drawn a cross, and we were saying in this area, we're trying to see the reversal, and this could be a double bottom with which you could take a trade back up to here. And if it's closing back above this, we can take it back up to here essentially. And look at that, guys, incredible. Of course, now we've lost this, it looks like, and we've also lost the moving averages. It wants to come back down, but currently what's holding on for dear life, it's clinging on for dear life on this area, which was once resistance, which could now be support. Why I say this is because since this price, we've been putting in higher highs and higher lows. So here's a high, here's a higher low, here's a higher high, and now we're hoping that this is a higher low. However, currently we're below this red line, we're below the moving averages. So if this does not hold, it's back down to the demand zone, guys. Simple as that. We're being held up at the moment by the golden pocket, as you see, and that is in line with that neckline of this double bottom. So yeah, holding this is key. If we lose it, you do actually have one more opportunity of bouncing and reclaiming this level, which is that 786 over here. Oops, sorry guys. 6443832. We'd need to see price holding this as support and then flipping this area back into support, not resistance. We don't want to pump into it and dump. Currently, we haven't lost this yet. As you can see on the, we've got 2 minutes left of this 15-minute time frame. We've actually climbed back inside. So yeah, we'll look at that in a bit more detail in a couple more minutes, if I'm still recording. But let's go over to the weekly time frame quickly, see what the weekly is now saying. Okay, so I know that everything's very ugly. Let me just move this across. So we currently are above that golden pocket. We're looking to create that reversal wave. We're just simply running into that 786 and retracing at the moment with this. It's just on the lower time frames we're getting to get a clearer picture, but the weekly time frame is essentially saying as long as you're above this 20 moving average, we've got a chance of actually heading to this 55 up here at 10 cent. Of course, in the way is this key area of resistance, our range high, and that's where we're currently rejecting with, of course, the pump on Friday last week. Yesterday, what is unfortunate is that we did run into the 200 and did not clear it. We can see to the left what was once support is again resistance. So this is something that we need to push through on the 4-hour time frame. Let me get the drawings back on the 4-hour time frame over here, from the high to the low. Yeah, that's where we rejected the golden pocket again. It doesn't necessarily mean we're instantly dumping from here. Again, we could just be trying to find support on that double bottom neckline to head into this golden pocket and actually push through this wick to try and head to 618, which is the 7285. So we're just simply waiting to see, okay, are we going to hold this neckline? Because if so, there's chances of trying to fill in this wick. Okay, if we can hold this neckline. A loss of the neckline means that it's back down to the 786, and a loss of the 786 is back down to here. You just need to just play it level by level, guys, because at any of these levels things can stop going as they should. So that's why early in the video I was saying you could actually bounce from here. So this is why we need to play it level by level. Of course, if we get rid of the fibs, what I would say is a loss of this area would push us back to the range lows. Why? Because when we pumped into this resistance, you fell to where? Down to here. So simply, if I lost this now as support, shouldn't I just drop to here? Because when I ran into it, I couldn't get through it, so I came back to here, then got through it. So if I ever lose it, surely I should come back down to here. This is my thinking. However, of course, we need to also add on top the Fibonacci's, and that's saying, look, you've got a 786 fib right here. This is where you could potentially bounce and reclaim this golden pocket. It's not necessarily true that we actually reclaim it. You could just run into it as resistance and then take out the 786. So there's a lot of potential scenarios, guys. Of course, that's annoying. That is part of trading. You're here for the wrong reasons. If you don't want that, it's here. Deal with it. So that's why we just need to prepare for all the scenarios. If you don't like that, you shouldn't be here in the first place, because nothing here is a guarantee. And you know that, talking to the noobs, that they don't understand that. But again, a loss of this area, continue down to 786. We're waiting to see the reaction from here, but initially it should act as support. So you would have a short-term bounce looking to reclaim this, but really and truly a loss of this should signal continuation downwards. But if we get that freak pump where we flip it back into support, we're going to try and head back to the range highs over here. That's pretty much it for today's update. But yeah, the 15-minute candle did just close, and it did close within the 618. So that in itself, there's no manipulation here, it should continue up towards the moving averages. If the moving averages weren't there, it would be the 0.5 fib, but the moving averages are there. So again, that's the signal of this candle. It's just closed, but simply you can invalidate that. Nothing here is a guarantee, guys. Even a bullish reversal candlestick off the golden pocket, which is everything that should be bullish, doesn't necessarily mean we'll get follow through. You can still head lower. That would be invalidation of it, and yeah, you just have to take the loss. Sorry, that is just part of trading. No one could. I have to deal with that. You have to deal with that. Everyone has to deal with that. It's just a person that's, of course, consistently profitable has gone through that more times than someone who is not, and they got pissed off so many times that they don't allow it to happen as much. They're on job with it. So yeah, if you're entering a buy now, tight stops, because if you're losing this, then yeah, we're going down. So why would you continue holding if we're losing this? So that's why I'd say stops there. Equally, you could have a sell stop here for continuation downwards preparation. Thank you guys so much. Like, subscribe and comment, share it, and turn the notification bell on, because everything is time sensitive. Check out those channel memberships. If you are a member, turn on those notification bell on, because you're not watching even though you're paying for early access. So if you want those membership levels, go check them out. If you want to be part of my Discord community, that's part of my education, which is the one-to-one mentorship, as well as the course if you don't have time. Thank you guys so much. I'll catch you in the next one, and as always, peace.